So there are countries which are doing weird things. You shoot your nudes and then they keep the nudes as collateral. This is terrible. School fees in lending industry is very expensive. It can cost you as much as your whole country. The person who came to us who didn't have a wife, now he says, what? My wife, why the my wife needs me? And the person says, no, I was coerced. I did what I was doing. This person probably hasn't picked it. One of the things that have actually caused us fracas in the lending industry. That kind of harassment and blackmail, posting people's information and all that, is threatening them.
In this episode, we speak with Jonan Kandwanaho, the president of the Uganda Moneylenders Association and the CEO and founder of Jonaki Holdings Limited. As the newly elected chair of the UMLA, Jonan is leading efforts to address concerns raised by President Yoweri Museveni regarding exploitative money lending practices, pledging to promote ethical standards and financial integrity within the sector. Learn more about his inspiring journey, his insights into the money lending industry, and the positive impact he continues to make in Uganda.
If there is a bad practice that the lender deals in the field, by the time the license is coming up for renewal, the president knows. He knows of that incident in that field and can easily call upon it and say, this one will not give. Maybe come with disciplinary committee to address this issue.
Thank you. And you also, as a lender, as the association, you come to know that, you know what, this person did the wrong thing. And before you know it, all people will be desisting from bad practices to better practices. They'll be doing the right things. And before you know it, we have trained the industry. But it will take the efforts of the lenders and our association and the government, with the support of our leadership, the regulator, Ministry of Finance, His Excellency the President, because there's a particular bracket of people who the bank cannot give money, but they still have to fund. They still have to take children to school. The time was at the university, I made an interesting trend, where when students are just joined campus, I started the semester. They have some bit of money. They tend to buy gadgets, electronics, and some other items, laptops. But when we semester, somehow things get to go south. Yeah. Things get tougher. And something that they bought probably $1 million shillings, they sell it half price. As you come towards the end of the semester, it is even tougher. It's going for 3/4, or even less than that. So I had my friend during the vacation, my friend 6 back. A friend has a shop at Italy. He's called Jonan. So this guy has a shop for electronics. So the time I was at campus, I used to get electronics cheaply from the university and come and sell them to this guy, or put in his shop for display, and then buy them at a slightly higher price because it's no longer campus environment, but now it's exposed to the public and people who are passing by and buying things. So I give him a cut, I get my cut. So after campus, I did my internship, given that I did industrial chemistry, as in the chemistry laboratory. So I was working in the Uganda National Bureau of Standards. So during that time, I also noticed almost an interesting trend, similar to the one I noticed at the university, where when government is transitioning from one financial year to the other, salaries of the staff tend to delay. So sometimes it takes a week, sometimes 2 weeks. So it comes to one moment, of course, because I was trading, even when I was working for free, I had some bit of some command, so to have some disposable cash. And you know, somewhere people notice that you have some money. So this guy confides in me like, you know what, Jonan, it's June, transition into July, salaries for July has delayed a bit. I need help. I'm literally stuck. I'm actually almost parking my car. He was driving in a hurry. So I'm almost parking my car, so I need help. I'm like, so help, how much do you need? 200,000. I'm like, okay, 200,000 is not big money, so I can help you with 200,000. But just have to put some small interest. So, Jonan, what are you talking about? How much is that? I will just put 40,000. What is 40,000? Mind you, these guys were earning 2.5 million, 3 million, 3.5, 5 million, 6 million. So, telling them to add 40,000 and 200,000 is nothing. Like, man, you just bring the money. I said, that you're right for me here. You form a small agreement. He wrote to make a book. I had a book. And I gave him the 200,000. Lo and behold, after 4 days, the government pays. He receives the salary, as not earning salary. he gives me 240,000. But he didn't stop there. So through word of mouth, he goes and evangelizes. Evangelizes with the rest of the staff. He says, if you're stuck financially, this boy is able to sort you. That boy you see there,
This young man.
is going to sort you. And before I knew it, I got an overwhelming demand from him. Overwhelming demand. So since I didn't have a lot of money, and the demand was high, I had to think very fast. What do I do next? People need money. And most of them, if not all of them, I work with them in the lab, in the same institution. So I had to think very fast. So I have, there's a husband to my cousin. They had a microfinance conference, capital finance in Kandwanaho. So I went to him, told him, no, I've been needing money as a man. Of course, he was trusting me, but also he knew that as a change regulator, they would confirm me and I would have a salary. So what I would do is that I would borrow from this guy at 12%, come and lend to my workmates at 20%. So I was making a cut of 8%. I was making a cut of 8%. And basically that's how Jonaky Holdings Limited came to be birthed. Before I knew it, the demand kept increasing. And meanwhile, I'm now working at doing this. I start earning salary. I get a few trips here and there. So it also helped me well because I didn't have money with me. Because wherever I have money, people would come for it. So I'd be broke most of the time. So it came to a time when money increased. So I started having cash.
From the profits you were
From the profits I was making,
from
so I started having money. It's a bit of money on me. Now it also catapulted me into something different. Because then I attend some wedding meetings and you want first people, first hustle, struggle, auction, what, you come as a last resort, big shot. Like if the auction is stopping at 1 million, I am down with that. So I got excited. Because I had some.
Is that a marketing technique? So that no.
No. The thing is, if you're a small fish in a small pond, you tend to think that is the water that is the best.
Yes.
If that very fish is thrown into a sea, it will start enlarging and expand. Yes. Why? Because the waters have enlarged. So my client had almost reached the climax. Now I had some bit of cash. The ideal thing would have been now think about going outside the public. But now, because I had absorbed all the clients that I had, now I had disposable cash. As and when the client pays, you have money on the phone, you have money on the account. Yes. I mean, so you're more prone to actually spend it anywhere. So it was a trend until I attended something that was called straightforward financial growth. It was a breakfast, paid for breakfast. I went and attended. And that's what opened my mind. From there, I got to mentor, and that's when I started thinking, you know what? I have to get serious. I have to think outside the box. I need to get to an ocean. Now I'm in a pond. Yes. I'm thinking I've arrived. Yes. So now the narrative changed. Now I get in touch with one of the guys who was ahead of me. Same age bracket, but ahead of me in lending. So this guy became my mentor. But I looked for him for like 3 months, trying to hit an appointment with him. Looked for an appointment, nothing. Because then, after having some bit of command, people started realizing that I have some business acumen. So they made me head investments, UMLA staff. So I was not heading staff investment. So one of the AGMs, they told me, Jonan, we want someone to speak for us at the AGM. And so I was referred that guy. I looked for him for like 3 months. Failed to get him, but in the 3rd month, he gave me 1 hour. We met at Nakao Business Park. We discussed for like 2 or 3 hours. We were offering 220,000 per hour for that talk, but he was selling $100 an hour. So he said, Jonan, I'm going to come at your AGM to speak, unfortunately, because at that time in the church, you cannot afford. But meanwhile, me, I benefited. Because then I said, given your character and given your integrity, because lenders are known to be, quacks, money sharks, all those words. But for him, the way he was doing business, I envied him. You know what? I've always wanted a mentor, but now I think this is a perfect guy. Perfect guy is So I talked to him like, Jonan, I am very serious. If you want to get on board, you had better tighten the belt. So first he says, you know what, we can organize a meeting. But this meeting, I charged. Individuals are charged $1 million an hour. Mind you, this guy, same age bracket to us, but he's at a particular level. Like, man, you're kidding me. $1 million an hour to talk to me? I'm like, no, you just follow yourself. I won't manage. I won't. Of course, I could manage, but see, in my heart, I'm like,
By principle.
I'm like, I won't give you that money. But after, because the business is interesting, you have clients who are hitting you in the head. Some are not paying, because now when they could serve any more of my workplace, I said going public. This is when we transact in cars, someone comes and parks his car, lots of things, but I'm still informed. I said, you know what, I have to put down my pride and meet this guy. So he gave me the number of the secretary, I wired $1 million, we hit him. I met him, we interacted. He gave us a limit. First, register the company, fully registered. Second, get an office. If you're not going to work there, get a person to work there. So have an address. So give me like three assignments. Said, until you do that, you're not meeting again. I thought he was joking. I'm like, man, in my heart, I'm paying you. It was a joke. So I went. Somehow, I at least I registered. By then, when I went to register the name, it was called Jonan Investment instead. When I went to URSB, the name was already taken. So I had to change the name from Jonan Investments to Jonan Holdings. So I registered Jonan Holdings. So I get a space, but somehow I did it down. Rent, what? I'm like, let me hold up. Since I registered, let me chat with this guy again. I seek for an appointment. Took us 6 months. He says, Jonan, I can't do an appointment. He was the to put in and give me. What's up, no, nothing. He says, Jonan, we agreed until you do A, B, C, D, F, G, as we agreed, you won't meet me. So I got an office, got a staff, fully registered. I said, here I am. He organized it. Gave me another.
He was available now.
He was available now. So you can imagine how, because, he sat me down at the time in some of our meetings. You tell me, Jonan, let's open the bank account online. We'll download the bank statements. We almost started the same year. You're like, no, show me your numbers. So what explains my numbers and your numbers? Where is the difference? Why are we not understanding? Not even an inch where I am. So what are you talking about?
This is why you have to follow
yes.
If you want to get where I am.
Is follow it verbatim. Follow it verbatim. Follow it verbatim. So that's how I entered in. So once in a while I could have scenarios of, eclipses of he tells you do A, you do B.
Right.
And much of the time I burn my hands. So sometimes something that is very helpful can come to bite. But it's biting you for the good. It's like you're not feeling well, you're sick, and you go to the hospital and they inject you. You'll feel the pain right there. You'll probably cry a little. But the thing is, after some time, the fever is going to get to low. The temperature is going to normalize. You're going to rejuvenate your usual strength. But it was painful at the start. So I did not bite for the injection. You didn't have a power. So that's how we took it. And because of that, I've come to help a number of other lenders. Because if you have checked out, I have a YouTube channel, I have a number of subscribers, 2,000 pounds. So I've helped guys, both locally and internationally. I've consulted. Guys flying to come and meet me. I also charge. But you see, the charging, what people need to understand. The charging, this guy didn't much of my money. But usually what you pay for, we tend to value.
Yes, of course.
The time as at the university, when the government was paying for me at my bachelor's, sometimes I'd afford to miss lectures. Or the lectures at 7:30, like we had thermodynamics for chemical engineers, 1, 2, a guy would come at 7 a.m., 7:30. Some of those lectures I would miss. Why? Because I was not pulling out of my pocket. So I tend not to value so much. But there's a time I attend the course, paid for myself, a course at UMRA, Uganda Management Institute. Boss, they would say we're meeting at 5:30 p.m. I'll be there for that. 1 hour prior. Why? Because I knew what I wanted. But also, too, I paid for my tuition, so I knew what it means to cough your own money. So much of this study is not necessarily, I need money badly, but much of this study is that you can value what it is that someone is telling you. Why? Because you've read the things, some of the things in the books, you've watched them in videos, but because the videos were free of charge, or probably the guidance was free of charge, you didn't take it serious. But now that someone has charged you, now you get to go on the list. Like by the time I pay a second time, I had better take books and see here. So that's why I charge my meetings. I used to run masterminds, I charge them. I run masterminds. 5, 10 people, one mastermind will run for like 5 sessions. And from the same, even the people I help have come to launch. We've launched in Zambia. We opened an office in Lusaka, started operating in August this year. But it's from the guys that has mentoring in the mastermind. Because I was also looking at the statistics for my videos, I was looking at the number of people who are watching videos in Zambia. 2,000. We post a video, 1,000. They're like, what is this? Yeah. So I picked interest. And from the guys that has mentoring, I come to interact with them at length. And I fly there, I do business research, and I find the market very interesting. Very fertile, ready. I'm like, wow. Why am I? So we launched. We launched. So we now have Jonan Holdings Limited to set up. Fully licensed operation.
Following the guidance of your mentor, telling you everything very well. Of
course, now that I'm moving a bit of time is that I've come to master a number of things as well. I appreciate my experience, but the guidance of the mentor. Things have moved straight now.
Are you using the same principles that you learned? Are you applying them? The same, well, not rigidity, but alignment, principles, making sure you're dotting your I's, everything?
Absolutely. Principle. If I pick one in the field that I find very interesting, is that much of the time why our industry has an interesting name, lenders like BAT, money shops, and parks, is that you lend someone because you've seen them drive, park a Mercedes, GLE. But it's not the Mercedes that are going to pay that money. But because someone has an apartment in Chanja, it is not the apartment that's going to pay that money. You need to take someone's cash. Because by the time the apartment pays the money, you're already in court. You clash with the client. Now you can imagine if a client you clash with, they cannot refer you. They cannot even give you more business. You're not even sure whether money is recovered. So we look at cash flows. This time the MZE came, we had a very brand new RAV4. Valued at about 120 million. But only 25 million. Looking at his cash flows, the bank statement, he last deposited 300,000 in 6 months. He had already retired, no cash flows, no nothing. We told him, we can lend against this car, but you want to lose it.
Based on what you're saying.
This is what we're seeing. You can't afford. I said, but I tell you, I pay, I don't pay. I'm like, you can't afford, you're going to lose your car. We can't give him the money. Why? Because we knew we were going to clash with them, and it is very easy to recover from the car. Disposing it off is very easy. But we couldn't lend to him because he didn't have cash flows. But I told him, I said, you're going to go to another lender, he'll give you the money. But the car that is worth 120 million, you're going to lose it to 20 million, 25 million. Because there will be many buyers available. But you can imagine how it can taint the industry, it can taint your business. She won't go speaking well about your business. Why? Because you've clashed with him. We didn't give him the money. But in those senses, even if you give him the money, it will be recovered. But how will we recover? We would have to lose his car, which was not our intention. So now, given that it is not the car that pays, you said it is the cash flows. You have to have the cash flows.
I think other lenders will jump with this opportunity. For sure. 300%.
They will jump with it. Why? Because all they want to take is that money is recovered. In any case, the interest is in the car. You want to get this car. Give him 25 million, but the car is valued at 120 million. Okay, this car probably 30 million. You can imagine how much the client will have lost. Now, translate that to a property. You have a property that is worth $1 billion shillings, and the guy has lent you 100 million. Before you know it, you're losing the whole property, 500 million or 100 million. And that means someone probably didn't do their homework, assess you with financials, or probably the interest was in the building. You know there are some lenders whose interest is in the building or the collateral. And the first question they ask, what collateral do you have? It is not the collateral that pays. So there are a number of principles that are very important.
But for you, as the president of the association, if you know that a good majority of people, I would say maybe a good majority of the lenders out there, are looking at the asset itself. This is what they want to get at the end of it all. Is there a way you can streamline this in the industry to ensure that the focus, like you're saying, is on the cash flows, the ethical nature of the business itself, being able to guide the client and tell them this path that you're trying to take is going to lead to this, a bad end point for you. Is there a way you can put a policy in place or at least guide?
Yeah, that's why we birthed the association. One, because we want to put what we call codes of practice, but also the guidelines to follow. Why? Because if you belong to an association, there are things that you cannot do. You cannot do. Or else you forfeit your membership. Because anything that a lender does affects or taints the name of the lender. You may do your bad practices and get away with it, but you have tainted the whole industry. Now, all of us playing in that industry are affected. So one of the things that we have pushed forward and still pushing forward is educating lenders. We are working with Uganda Microfinance Registry Authority, UMRA, which is a government institution that regulates lenders, to teach lenders what it is they are meant to do, what it is, the procedures they are meant to follow, the practices they are meant to follow. Because if not us, then who? It is us to clean our own industry. I kid you not, lenders do great work. They do great work. The recent report from UMRA was showing that about 1.2 trillion had been lent out in circulation. Now, we have 1.2 trillion in an economy. It is a big thing. That whereas the bank tells you come after 3 months, you have a consignment at the border, you have suppliers waiting. The lender says, this 300 million, I can give you in 12 hours. Now, you cannot kill such a person. But because you have killed this person who is importing things, you have killed a value chain, a line of people. Then you create what we call black market. Black market, it exists in Ghana, it exists in other countries, but it has not been put. Where we even sell their things half price. Because I'm on pressure. So what we are doing as lenders is that we want to teach our fellow lenders that look, let's not be short-sighted. Let's look long range. You don't want to collect that 100 million and you're not sure it will be collected next year. You don't want to collect it next year and you're not sure it will be available the following year. Look at it in long range. So I get to meet a number of people. Some of the things I've been teaching. That's also I've been able to do YouTube. I do YouTube every week. Share these things. Teach. I run masterminds. I do one-on-ones. All the things I intended to clean up the lending industry. So all of us, someone might look at it as if you're shooting your own fruits. You're telling your people, other lenders, your competitors tricks. No. If you grow together and all are the same wavelength, we shall clean the industry, but also there are a number of clients who can actually serve. Because then their thoughts about lending will change. 360. They will change. So we shall have more business. So that's why I've been able to teach, even on YouTube. I've been able to teach masterminds. I've been able to teach. Why? Because all of us can actually get better and we get to clean this industry. Otherwise, we can't just leave it in anyone's hands. It will be bad. And eventually it will bite on us. So that's what we're doing for lenders. And for those who are in the association. Of course, there are those who are not. We're trying to see how we can entice them, call them up, persuade them to join us. Because it's not a matter of if, it's a matter of when they will close. Because closing will close. That one I tell you the truth. Because once you inform, you land on one client who knows his game very well. Some of them are fraudsters. She'll blame you once and you can't go to court. Why? Because you don't have the license. Because it was actually a dubious way. She'll close shop. And I kid you not, people are closing shop.
Actually, that brings me to a question that I have for you. The risks that clients have are almost clear. Loss of the security is, I think, is the number one risk that they have. But when it comes to if we're in the lender's shoes, what risks, or maybe the main 2-3 risks that lenders have when dealing with new clients on a repeat basis?
So we also encounter a number of risks. The first risk is that the time someone applied for a loan, their cash flows were good. But somewhere, because the business is not going well, or probably because of COVID, or a number of things go south. Now, this is a client you moved with for probably 1 year or 2 years. All of a sudden, they have gone bad. So collecting that money is a problem. So you have to do an amicable agreement with the client, probably put some write-off, and then you get the headache. Or else, approach it radical and foreclose on the item that the person has committed. But for the person you have history with, you can genuinely see there is a problem, and then you see how to work it out with them. Because you know what, that very person can give you much more business than the money you've recovered from you. I've seen it personally. Because you worked out in an amicable way, both of you have got along with it, clearly in a good way. Someone brings you a business that is not even close to what it is that was giving you as an individual. So it's good to look on great. So that's one of the challenges. But also, too, the second challenge is that some of the borrowers are not integral. They are not integral. Someone will come borrowing for a business which has good cash flows. But before you know it, when things go south, when he's been beaten in a different industry, that's when he tells you the truth. We have a scenario. Of course, a number of scenarios, but I pick one of them. Person comes for money. There's one lady working for money. Committed her like title. We gave her about 70 something million. And then she goes, she invests in gold. Now you borrow for something different, which has cash flows. You go and divert the money to something different. You have not invested for which intention you have borrowed the money. Now, you won't afford it. You won't pay. Before she knew it, she was low. The money was taken. Then she started struggling. So asking ourselves, what's happened? Until we dig deep. And then the person opens up, you know what? Things were tough, no pay, and so I invested the money. But when you borrow the money, you are told us something different. So it's a big challenge. When someone needs money, they need money. So that's why even some of the borrowers say, or even the public say, that lenders ask for sale agreement. Because you're under a lot of pressure, if you meet an informal lender whose interest is only money, they will make a pile of papers. For you to where can I send? For you, if you need money, like you said, all you're asking for is where can I send? But what else?
Explain that part, because I also have a question related to that. Whereby you want to borrow some money, and it says, give me your phone, right? And you say, the phone is a security, and then the lender gives you an agreement, a future dated sales agreement for this phone. And there was also some practice, I don't know if it's still occurs, whereby once this future dated sales agreement has been issued against this phone, and the money has been issued, when the date approaches, the lender disappears. You can't find them, and they want, on the morning of, they will come to the phone or the house, whatever the case is. That is a practice that was very rampant. I don't know if it exists, but I wanted to get your thoughts on this.
Yes, so the law gives you the options. Gives you the options of depositing the money on the company account. Because when they were giving you money, I understand that probably they didn't give you cash. Because ideally it's a trail of transactions. You're not giving cash. That could be for a story for another day, but ideally you meant to have a trail of transactions. So I can confirm that the money left in a holdings account to your individual account. So you can pay back and keep the receipt. And the due date will be captured. But also too, the law gives you another option of taking that money, deposit it with UMRA. The Uganda Microfinance Regulator Authority. Say, look, I brought money from ABCD. The person is not budging, is not available to receive the money. So, let me deposit it here. In the event that he comes the following day, he wants to take my house, I'll pay the installment. So there's evidence. They give you a receipt. So there are a number of options that you can actually employ. There's a number of options. So the public sometimes also needs awareness on how to about it. But all these options are available. Challenge is someone might disappear and you're like, since the guy has disappeared, maybe also use this money. Let me be using it. Let me be watching it in my business. When you remember to come back, then I'll pay them. But the thing is, it's also one of the requirements that you're not supposed to sell, to sign a sale agreement.
Also, that is no longer acceptable.
It's not.
If the lender offers you a future dated sales agreement.
Any sales agreement, because you're not selling that thing, you borrow against it.
And what they used to say is, well, if you really plan on bringing back my money, you should not be concerned about the sales agreement. Because if you're saying that you're going to bring it on such and such a date, even if we write 5 sales agreements and you bring the money, the agreement will be useless.
I really get it, because I really get what you're talking about. But the thing is, I may not be concerned, I may be able to pay, but time comes for payments and money delays. What then happens? Puts me as a borrower in a tricky situation. Anything can happen. What if the person passes over? What then happens? He has sold the thing. So there are lots of other options than actually doing a sale agreement. There is a mortgage which is recognized. And actually in the law, there's a mortgage. You can put a mortgage in the land title. It still weighs. You can still foreclose if you foreclose. But on good grounds that someone has actually failed to pay, you can put a carriage in the car. You can install a truck on the car. So there are lots of other options than a sales agreement. Because the law does not provide, it actually states it. You're not supposed to write a sales agreement. Idea to a borrower. So the idea is, as a borrower, you also borrow with an intention to pay. Because as I highlighted in the interpreted thing, the someone borrows when they know they're not going to pay. If you want to play around with your money, most of those guys come for a chunk of money. $500 million, he says, I'm going to tussle it out with this guy for 6 months, I'll have invested it. After he has treated plasma, he will come and we sit on the table, and I give him back his principal. Those things also exist. So it's one of the challenges that we face. Because court is interesting. It's a long process. It's a back and forth. But someone is using the money. He's actually using giving the very money to play out in court. Yeah, to play out in court. Lump sums of money. Plays out in court. Because much of the thing is money. He uses your own money borrowed. And then he plays you out in court. And 6 months, 1 year, he's using your money. Until you budge on it on table and gives you back probably principal and small interest. But you have used the money. So it's one of the challenges that also lenders face. But also we've seen interesting scenarios in other countries. That's why I'm saying that, when we're looking at these things, it's not good to look at them in isolation. Share the practices of other countries. There are some radical countries. There are some lenders that are, not that we should compare ourselves with the worst, because I'd assume that for the good lenders, they are existent in Uganda. The clients also have the ability. Check out on the internet who are the best lenders in Uganda. Go to the lenders who can. And interestingly, the best lenders lend at a very low rate. The lenders you find at 5%, lenders you find at 8% reducing balance, but you find someone going for 15%, 20%. Where are you going to get that return on investment? Which business? If it's gold, it's a risky venture. So there are countries which are doing weird things. A country like China, they will shoot your nudes and then they keep the nudes as collateral. It is terrible. These things are available on the internet. So you can imagine shooting your nudes, your nude videos. You're like, this is the collateral. Don't give us land title, don't give us anything. Now your integrity is at stake. Your whole personality is at stake. Your whole name is at stake. And some of the people who can be pressure for money can say, what? Please shoot the video. Because even you don't have a guarantee that even when you pay, this person has even deleted the videos. So you can imagine someone having such a collateral. You are at stake. You can even choose to change and say interest rate now has shifted from 15% because of inflation to 20%. And or else I'm going to
if you had a big sales agreement or contract with things hidden in there.
Yeah, even the banks get those letters. Have you ever seen when you're applying for it? They're very, very small.
Yes.
So you can't even read them. But that's why they just romanticize sometimes. Not that I'm saying, we should compare ourselves with those worst practices. But I feel that in our industry in Uganda, we are not bad enough. The situation is not really that out of hand. It can still be resuscitated. It can still be recovered. But it will take the efforts of the lenders and our association and the government with the support of our leadership. The regulator, Ministry of Finance, His Excellency the President, because lenders exist for a reason. There's there's a particular bracket of people who are not banked. There's a particular bracket of people who the bank cannot give money. But they still have to thrive. They still have to take children to school. They still have to import things. The bank is telling them 3 months. Where will he feed them in 3 months? He has a consignment at URSB. He's paying down $800 or probably $300 per day. That could be interest for 1 month. So give this person money, they clear your consignment, the suppliers are waiting, they supply, they sell, they get their money, you get your money, they're all happy. So you cannot shoot such an interest. Even in London, the UK, they are lenders. In the real estate, they are lenders. Because there's a time when you'll have much need for cash, and the bank cannot budge at that time that you need it. And you may not have to interact with the MD of the bank. Even if you did, systems alone can beat your hands down. Because they are audited. But now you find a lender who can actually serve in the shortest. That's why we exist. Because whereas other institutions say come after a week, come after 2 weeks, as we said, in 12 hours you have the money. So you cannot close such a need. You cannot. We still have a big road to do. Big road. But our road is not cleaner. So that even the negatives that we are facing can get to fizzle out, and then you can operate. We can operate. Because like I shared our challenges as lenders, which is a question that you posed. We have challenges which also need a solution. I'll share with you another challenge that sometimes someone applies for a license and it takes long. And for the time you're lending in that time when your license has expired, it's like you're lending illegal. But ideally you're going to have a license or to renew it. Because if I've been running this industry and you've not received any complaints as my regulator, why then should you hold my license for 6 months and not issue it? You're exposing me.
And from what I understand, the license runs for 1 year.
1 year, straight 1 year.
Has to be renewed in December.
Yes.
And the renewal process takes some time.
Some time.
Can you do it online?
No, we apply online. The good thing is that it's applied online. You submit, but you also have to print some hard copy documents and take them to But for the .com 21st century, it should be free online. Like URSB, you can apply for almost anything online. That should be the way. But also in the event that, some industry are interested in Ghana. I go to visit Ghana. I visit their industry. In Ghana, the president of the association, of the Money Lenders Association of Ghana, signs on the licenses. He sits on the board of the regulator. In the event that the license of the board of the lender is revoked or is not issued, they ask for a reason. The president has to explain. Ideally, the position I hold, I'm meant to sit on the board of UMRA. Because we're regulating you, I'm also helping in our industry. Yes. But also you're existing because we're existing. Yes. Because if there are no lenders, then you don't have someone to regulate. And you give them the insight from what is happening on the ground. First-hand practice. Because I have the practical bit. But also I have goodwill with my fellow lenders. I have good interests. I have interests, their interests at heart. So in Ghana, the license is a provision. The president has to sign the license. Then you have to sit on the table and say, why was this license revoked? Why are you not issuing the license? So these are things that you're actually pushing.
And I think it is also because if there is a bad practice that a lender did in the field, by the time the license is coming up for renewal, the president knows. He knows of that incident in that field and can easily call upon it and say, this one will not give. Maybe come for disciplinary committee to address this issue. Thank you. And you also, as a lender, as the association, you come to know that, you know what, this person did the wrong thing. And before you know it, all people will be desisting from bad practices to better practices. They'll be doing the right things. And before you know it, we have trained the industry. Some of us have the capacity to transition from being money lenders to microfinance, no tier something like microfinance. But now, if everyone that starts from the industry graduates to another level and leaves the industry, what then becomes the industry? Some of us started at that lower level. So it is our responsibility to actually pull up the people at that level. Because if you keep transitioning, then who will pull up these people? Because they have no to play. They have no to play. They also have families to feed. So it's good to look at it double lens. Because both ends are pertinent, they are very important, but they also need to be supported in no ways. When you look at the percentage of the pie, you have your formal regulators or formal banking service, the unbanked, MFI, yourself. Where would you say your percentage falls.
Percentage of the clients that we serve?
Yes, percentage of clients you serve, yes, in terms of population of the country. Formally banked, maybe this percentage, unbanked, this percentage. Coming to you for money lending service, what percentage? Roughly.
The percentage that money the population?
Yes.
I must say that you have about 23.4%. That was a report from the Bank of Uganda.
Wow.
Big percentage.
It is huge.
Huge. Huge. Did you see a report from the New Vision? And even the Bank of Uganda, 70% of Ugandans have debt somewhere. 70%. Now, 70 of that, 23.4% of that, and they to lenders. So you can imagine it's a huge fraction of people. That's why I'm saying that fighting the lending industry suits the population, because then people will go black market. First lend me a property. We will sell it, and like I've sold this property or sold this car to you. In the event that I pay back, it's at my goodwill that I can transfer it back to you. Whereas if you land in the wrong person, you can say, what you sold, you sold. So how do you then explain that you had a background understanding? You won't explain it to the court. You will beat your hands down. So you wouldn't want to create such a black market. We command a huge population. Huge population. Bank of Uganda releases a report, an annual report funded by the World Bank. That does the bankable and bankable, but we command a huge fraction. And you know what? Banks are hesitant. Because you see, this is what we call crowding out the market. So when the government is borrowing money, it issues bonds, government bonds and bills. Now the commercial institutions, the big boys, go and buy those bonds and bills. So their money is already safe. They have fixed trillions of monies and lend it to government. So they're already profiting from the world. So they have no interest whatsoever to the population which benefit even get loans. That's why they can afford to tell you come after 3 months. Why? Because they have already lent their money somewhere. Government is the best borrower. It will never default. Even if the government transitions, they will pay. If you invest in deals and bonds, that's what banks, commercial banks do. And that's why they can have the confidence to tell you what, come after 3 months. And you come after 3 months and says, you know what, because of ABCD, your loan has been denied. You have paid money, you have been moving up and about, coming back and forth, and the loan has been denied. They didn't have much interest. So then where does someone go? They have a genuine cause that needs to be funded. Some of the lenders have said, you know what, I'm moving my portfolio to real estate. And you can do my condominiums, you know my apartments. And you know, get out of this industry. Because it looks like we don't have good government way. Yet we are doing a very huge, important thing. Some of them are thinking of move out of the country. I mean, some of us have moved. Yes, we are still here, but we've also moved. Now, if I find that Zambia is good, I'm looking at Namibia. I'm looking at that, I'm looking at Liberia. I'm looking at that south of country. I'm not tied to Uganda. In the event that business picks up very, very properly in those countries, and they are being fought, what am I doing here? What transition? But you know how many people are employed? You know how the value chain of people that feed from the people that are employed? How many businesses that I support? And then they have dependents, they are benefiting. So when you look at the whole value chain and the number of people supporting, and their tenant dependents, a huge population. All those have been pushed down the drain because you're not supporting the industry. You're not supporting the industry. So that's why we've been making a call here and there. That look, this industry is very important. So we need to work with that. The solution is to clean up the industry with you, the government. With the borrowers also, educating them. You have all these options available. How about you? We are pushing for online. Where you have like a catalog. See, when you're in some of the apps like Amazon or Alibaba, you can compare different items. So looking at lenders, you can at an online option where you can get on the website and look at the different lenders and their rates and their conditions.
And their reviews.
So it also the borrowers can review and weigh you and rank you. I'm like, let me go to the rank. I'm looking at the reviews, it looks like it has 5 out of 5. and the comments are okay.
Is this something in practice already, or what?
It's not in practice, but it's not what we're pushing. It's one of the things that this new team that we have, the leadership team of the Money Lenders Association, things we're going to propose for UMRA and the government. Because these things are available. And they've been tested and practiced in other countries. Where we are headed, I want a loan and a profit Movable, where you can assist the borrower as well as the borrower assists you as a lender. And you all have an equal ground. You all are the same audience. Time is coming when someone can actually access money as and when and they come from their home. Don't have to come physically. That's where we're headed. So it's important to work together, get to use technology so that you can benefit the public as well. So you can imagine if I have 3 options or 4 options, I'll choose what I want, at what rate, and for which conditions. But sometimes the tighter the conditions, the lower the interest rate, much of the time. But if the institution A has the tighter conditions, I can go to the institution B, which is more flexible. So the borrower has options to play around with.
When I was on campus, I almost became a money lender myself.
Wow.
Yes. So we used to get living out allowance, okay? And the living out allowance would come maybe 3 quarters into the semester. Following exactly what you were saying. At that time, people were broke, okay? And they wanted to go, to do all the things that, kids at that age want to do. So they would know that they're issuing, faculty allowance for this, school, living out allowance for this. So we used to get this. And they will come and look for us. You people who do this course, or you people who live here, you got this allowance, right? We need to borrow something. So they would come and they bring, music systems, video decks, flat items, radios, all these things, anything of value. So in my room, where I was staying, I had a closet. The closet was full of music systems, decks, etc., all this kind of stuff from the money that I've left before. And then they would come back after a while and say, you know what, I can't afford to do this thing. What do we do? But we already signed an agreement. And at that point, they would agree to sell the thing to me. Usually at half the price. I had a friend on Rome Street.
Oh, almost similar story, isn't it?
Yes.
This is quite fascinating.
Yes. On Rome Street, I would take the music system and I would give it to him. The man would give me market rate. He would rob me also. He would not give me the pure market rate. But it was more than half.
But you also make
Yes. I take the money, pay the other guy, and they also go and spread the message. Yes, this man is a money lender, he's good, etc. At that point. But it confused me a bit. I didn't study a lot. I played a lot because of this. When you were saying that you go for marriage ceremonies with 1 million and you double, I felt kind of like that also. But yes, so when I hear your story, I was
quite relatable.
Wow. Yes. I did not pursue it, but yes, I almost got to that point.
You'd be doing a very good service to the public.
So when I see some of the people now, I said, okay, that one, I remember we had an interaction. Yeah, it was intriguing.
It's quite interesting.
Which brings me to a question that I have. In my short-term experience then, and I'm sure you've seen this as well, the issue of vulnerable borrowers. When people come to money lenders, usually it's at the end of the road. They have tried formal lenders and did not get anything there. Friends, relatives, nothing, and now they come to money lenders. They expect to get high interest rates attached to these loans. When you're dealing with people like this who are either vulnerable or desperate, how do you address this? How do you not take advantage of them?
Thank you so much for the question. Research shows that 75%, quote it, 75% of the borrowers have a potential option of borrowing interest-free money in US. Over 75%. So that means that what you call pressure, sometimes it's not as pressure. That a borrower still has an option. I'll show you an experience before I get to the second part of the answer to the question. So there are some clients that will come to us come to me individually. Like, you know what? I need this amount of money. You look at a person and the situation they're in, like, you know what? If I give this person this money at this rate, given what they need it for, it may not help them. It might dig a deep pit for them furthermore, in which I won't be helping. I share one of the people. She had a business to scale up. Person comes to me, says, you know what, Jonan, I want to go 25 million. 25 I can give you. But let's first meet. So we meet, look at her numbers, we have a conversation. So I said, look, I'm going to give you this money, but it's not very, very patient. Because you have a grace period of 6 months. I said, no, it's not. It's not tenable. It will also suffocate your business. So I'm giving you the understanding. Go look at the list of suppliers that you supply. Pick out a few individuals that you think are potential, they are good clients, and they have some little money. Call them and tell them, I need an advance. I need help with money. As a supplier, we shall be cutting it off and can get to the concern. So if you don't take a solution by tomorrow, get back to me. She goes back and tells me, she made a few calls in the evening. By 9 p.m. in the night, she gave me a call. Like, you know what, Jonan, I don't know. I don't know about you. I don't know what I don't know. But I've got one of the clients. She's offering 25 million. She's been in this period of 8 months, and I'll not be paying any interest. Now, for any lender who knows the client very well, because she had the capacity to pay, she also had a quality. So for any lender, you'll be looking at those numbers. Again, we have let this person build up struggle. She was vulnerable at that moment. But as I said, look, beyond this transaction, I'm looking further. One is that tomorrow she's going to be in business, she'll be at a different level. Probably because she came for 25 million now, she might come for half a billion. She may come for $1 billion shillings. Then we shall transact at that level. She may give me several other clients that are beyond even 25 million. So I look at things that way. So sometimes you as a lender, you ought to look at a person beyond their vulnerability. Not to take advantage of them. Not to take advantage of them. So, because by the time someone comes to a lender, they are on the wall, much more time. They are on the wall, they have exhausted all the different options. And that's why they are taking advantage of it. Because someone knows you don't have any other option. Any other option. So as a borrower, you ought to know, I have to look at it long way. Such an example. Someone comes, tells you what, Jonan, I have someone in ICU. I need money like yesterday. Now, in the event that this person recovers, either way, will the person's recovery recover the money or probably give you money? No. The thing is, we have what we call consumptive debt and investment or productive debt. Now, any consumptive debt that you find is close or more or less blinded.
Especially in that particular case.
Especially in that particular case. It's a consumptive debt, you're not taking that person. It's a consumptive debt. If they give you collateral, you're most likely going to foreclose on it. Because they have their person in ICU, they can sign anything. That's why you see some scenarios of, as unaddressed. I didn't sign out of my conscience. You never noticed that? You never see that? You've seen it.
Now that you mention it, I was actually...
And the person says, no, I was coerced. I didn't know what I was doing. This person probably has a PhD. You learned, you have bachelor's, you got a master's, you have a PhD. You are grown up. You're an exposed person, a business person, what to say. And the person says, I was coerced. Coerced to sign. You're kidding me. So that's what explains that. The vulnerability. So we have to tread very carefully. If someone is borrowing for consumption, and it's not a productive facility, but also the side of the borrower, you also don't wait for that red light. How options that? I've come to tell them, most of the clients, I don't come to harvest at the point of sowing. I have to sow and wait, because I know there will be a time when I need to eat. But I cannot eat what I have not harvested. So sometimes, as a borrower, I usually tell them, create that rapport. Even when you don't need the lenders. Actually, much of the time research shows that you need the lender the time you don't need them. Especially the business person, because you don't know when you need the money. There are lenders, I kid you, there are lenders who will be out of the country and says, Jonan, I want 150 million in my account, and they have it. Why? Because they sold good rapport, they sold relationship, they sold proof of capacity to pay, and we've been nurturing that relationship. So I must say that business is a relationship, lending is a relationship. Now, by those clients who come for 5 million, and you have to sign a number of things. Why? Because I've not yet introduction. So I'm saying if you're a business person, or you run a business, so you need money at whatever point, the time to come for the loan is not right there when you're in the world. Think about it before. Look at the different options. Look at the different options, because you don't know when you need the money and whether you'll be helped or not. So the issue of vulnerability is very, very, very key. It affects both the borrower as well as the lender. Because if I lend you and you're very vulnerable, much of the time they're the ones that create fracas.
When it comes to the issue of debt collection, I think this is the part where your industry gets the worst feedback. How do you handle clients who default? What methods do you use?
If you're in business of lending, defaulting is inevitable. But you have to define the exit which you can actually get to that, the percentage. So I usually tell people, and the actual practical experience is such that the loan is bad at the point of discharge. The point at which you're disbursing the money, you're giving out the money, is when the loan is bad. And it has a huge implication on how you collect that money. If I lend money to a person who does not qualify for it, but because they had a lapse in my process and methods, and lent them the money, collecting that money, I have a back and forth. So that means I didn't do my job, that even the borrower didn't do their job of paying. But much of the time, it is my fault. So I thought I'd bring that out. That it's not one icon, it's not one thing, one segment, but it's a process. The time you're giving out that loan is when you have to think about how shall it be collected. But the moment you don't have that lens in your mind, the moment you don't look at it in that way, it becomes very hard to collect. And that's why the procedures that we have procedures for collection. You've heard of other lenders. You must have been privy to some of the things on social media, newspapers, or someone publicizing, calling your grandmother, calling your uncle. Some of these people have high blood pressures, they're very old. They don't even know that they are selling products. But you get a profile of a person from some telephone company from somewhere, and they start harassing individuals. Innocent individuals. I must say it's one of the things that have actually caused us fracas in the lending industry. That kind of harassment and blackmail, posting people's information and all that, is threatening them. That's not anything of collection. It's not anything of collection. So how we do it is one, we take it, we tap on it at the point of disbursement, but also two, is that we get to relate to the client. They want me to get a loan. Like, Jonan, I came to you, and Jonaki, I came for a loan. They want me to give her that money. We don't wait for the month to elapse and we start touching this. We want to know if Herbert borrowed me and he wanted to import a car, or top up on his car's importing. Did he actually import the car? So we give him a car. Along the way, say, by the way, Herbert, were you able to import the car that you planned to import? Because then, a client who didn't say me the stories then, it will be very hard to tell you stories at the end of the month. Because it will help you, it will also help the client. And the person who already has issues will tell you, you know what, actually, I imported the car, but when it reached Mombasa, this and this and this happened. Now you prepare your mind and yourself and know that this is where it is headed. Now I need to adjust my mind to know that, you know, whereas he said he will pay you in 2 months or 1 month or 2 weeks, because when someone is calling and says, Jonan, I'm paying you 1 week. I'm like, no, I'm not paying you. It's a month. It is okay. Take your time. But in the event that you are paying 1 week, there's no penalty. Just pay in 1 week. But let's just give it a bracket of 3 months. It won't hurt. If you pay 1 month, well and good. But in the event that you don't pay, then you're not in the fix. But now, if Herbert starts telling you know what, by the way, they can't even reach Mombasa, and I got a hiccup. Now you prepare your mind, like, you know what, I think he faced the challenge. Because it's now half month. There's no reason why someone would lie to you half month. But now you see the picture. You know, this kind of loan, these other loans, we are going to approach this one. Now that's when you start telling Herbert different options. If they applied for 1 month, they're like, you know what, now let's think about extending the loan. Probably extend the period for 3 months. Or you look at, you know, so you touch base. By the time the period comes, our system, we have a system. So 5 days before the due loan, it's in the system.
Sends the client? Or
Client.
Okay.
Says, client, you have a loan with us of this much, so your due installment is happening on this date. 5 days prior. 3 days prior, it sends another message. It's automatic. 1 day, it sends a message. The due date, it sends a message. On your mobile phone and in your iPad. It's automatic. So you won't say that I didn't know, I was not aware. All media communication that you put across, all of them will reach out. And that's when even our team reaches out. The due date is there. The due date is today, so I make a payment. In touch base, they interrupt. That is a recovery. So recovery needs to be back to a relationship. Because if I come to collect on you, when you've not had any good foundation or relationship or rapport, it will look so transactional. And sometimes it's a big turn-off on the side of the client. Because all they know is that for you need your money. If you don't mind whether it did, what it did happen or didn't happen, whether it died or didn't die, so you don't care about. It's what the client will not tell you, but it's what you're profaning. It's what you manifest. Like, you know, for you, you mind your business, all you want is your money, but you want to know about me and my business. But in the long run, it is that client that will sustain the business. Without borrowers, we don't have lenders. So where do you put the money? I usually tell people, the guys that I met, that if you lend to yourself, it's not a matter of if, it's a matter of when you get out of business. You need to lend to someone else. You need to serve people. You're not creating that business to serve you. Because you can't even give feedback to your business, genuine feedback. It is that person to give you. Tell you improve here, improve here. We even have feedback. Ask even after you paid the loan. Even after giving you the loan, the system sends you a bill. How was the service? Even after you. Yes. Even after a loan, you review. How was the service? And people give you comments. And we have actually reacted to most of the comments. They say your turnaround time, fantastic. But somehow, I was not contacted before time. Then you know that I need to touch base with the client before time, so that you don't just fall with him. See, now you got in touch with me, but somehow the loan that you passed, probably 50% of the first value of the car, is too small. Could be stretched to 70% based on the period of time the client is taking the loan. So we've come to actually get good feedback, and it has adjusted our system, and it has even given us a good rating with the client. So I think that the recovery, what informs the methods is how, at the point of the disbursement, to the right client, but also having processes and systems in place. So that it's not transactional, but it's relational. Business is relational. It is relational. So for correction of fighting, it can't eat you. You want to clash with a few clients, and before you know it, you're out of business. Because word of mouth is the best marketing method. It's one of the best marketing methods. Word of mouth. Because the person has no shares in the business, he has no interest whatsoever, So what they are telling you is that they have genuinely tested the service and approve of it. That's why word of mouth is the best marketing method. So how you best serve your clients defines how many more clients they refer you, even them coming back for the service. I usually tell my team that if you do good service, you reach a moment, you reach what we call autopilot. Autopilot is when you know when the plane has stabilized the good terrain and all is well, weather is good, the pilot can afford to move around and greet people. So business can get to autopilot, where clients actually refer each other.
Yes.
You get new clients as well as serving your own clients. It is important to look at it in that lens. You can't get to autopilot when you not address some of the comments and challenges the clients are feeling. When you're clutching the clients as you're creating the money. So you should be looking towards that. Actually, it costs you over 7 times. We've done research at Jonan. It costs you about 7 times to get a new client than to bring back the client to the other side. So you can imagine that cost. Over 7 times to get a new client to test the service. So when you keep capitalizing the people you serve and serve them very well, so they can ease and reduce their cost. That is efficiency. So whoever clashes with the recovery, it is not working. But as the method we use our system, but also properly assess clients in lieu of time, because also time with lending is a business. Someone badly needs money, so you need to trade the balance, assess properly, but also make sure the person qualifies for loan. But also the system continuously update so that you can create a relationship with the client rather than making it more transactional.
When you look at mobile money from the telecoms, they also have challenges with bad loans on the mobile money system. What do you think about them?
It's quite interesting to actually compare the lender and the telecom companies. Whereas with the telecom companies, they give small monies, but that small money you see, cumulatively, it translates into something. But even then, the rates of the telecom companies are comparable to the lenders, even slightly higher. But because it's small money, you tend not to mind. You tend not to mind, or even notice. But it's until you're paying a person on site. You know, I have some sites, some construction sites. It's when you're paying someone, you assume that since the phone number is in their names, for you, like, you know what? If you pay, you tell your person to pay on this number. So when this person calls you back and says, boss, on this thing, I'm like, have I killed you by paying you? Yet the person has told you, I have someone in the hospital, I have a kid at school, I want to pay for school fees. But you send them on their phones and they're like, what's this? I'm like, why? I paid you, I thought you should be happy. They're like, I had a loan with my phone. That's when it becomes biting. That's when it becomes serious.
So as soon as you paid them, the loan was
cut off. The loan was cut off because telecoms have that advantage.
Actually, there is a common thing. They say, can I pay you? They say, no, don't pay me on this one. Pay me on this one.
That's what explains that. You're paying someone, you're thinking you're doing a good thing, you paid in time, but you have killed someone. Now a kid who is at school cannot receive school fees. Why? Because the man has been cut. That's when it becomes real serious. That's when it becomes real serious. When you look at small money, 100,000, 50,000, 20,000, but somehow it's until it forfeits you a bigger cause that you come to realize, you know what? This thing has an impact. And cumulatively it has an impact. So I usually tell people, just like you go to the gym, you don't go to the gym at 6 a.m. in the morning and leave at 6 p.m. and you want to have 6-pack in 1 day. Oh, it's a great thing. So if someone keeps getting those small loans, cumulatively, it has eaten on your savings, it has eaten on your discipline, it has eaten on your financial climate, and before you know it, you're locked in with the mind of borrowing, you're locked in with the mind of... So all the time you struggle after struggle, you're borrowing here, left, right, center. So it's also one of the things that is actually natural in the population to increase the appetite for borrowing. That even when that someone has money in the bank account, say that, but I have my phone access to the bonus. Not knowing that you're building some discipline, in a negative connotation, you're building some muscle in borrowing. And before you know it, this is when you increase the appetite. that now you're no longer borrowing 20,000 from Telecom, now you're borrowing. You've seen some people switch lines. Borrows from MTN, throws the line, gets another line immediately. So it's even promoting a bit of not very good prices. So I think it's good to look at it open-handedly, look at it and its impact on the population, because one or the other, we also need to support the population as well as ourselves, because we need to work together. Because all we need is a population that is financially capable. Because in the event that we have that population, we are all happy and we are all in business. So I must say that even some of the telecoms, their rates are saying you're looking at 9% per month. And most of the lenders will lend at 6, 5, 8, reducing balance. But because it's small money, you cannot notice it. It's until...
So it's not as painful.
It's not as painful. But I think in a way, it is painful. It may not be painful to you as a person, but it may be painful to a villager, someone from the village. And that's what commands most of the population. Someone wants to run the bank. They don't. And the other is there from star 1 to something and they get the money. And fair enough, the whole family has to produce. Loans. So you know it, someone cannot even afford to eat.
Or pick your phone call.
And it's a tricky thing. So I think it's an industry that has to be tamed properly, as well as interact, borrowers, lenders, to make sure that we're all on the same footing, but also all of us are benefiting. Because taking advantage of anything is not helpful. It will be short-sighted. In the long run, it will bite you. Even the lender. Because then you come to a time when you have a private population and you cannot do anything. And that's why default rate is high. I don't know if you know that, but the default rate for non-secured mobile lending, I have companies, I know. At a certain point, Jonan wanted to do that app, where you start, what. But when we looked at the research, the rate of people are defaulting. You find like over 75% of the loans don't get paid. And you don't have someone's collateral. That's what even has stated the names of the lenders. Now, because someone doesn't have collateral and the client is out of their hand, they say, you know what, let me use any other method to recover. He picks the information of the grandpa, sees the people that you call, starts harassing them. They calls the in-laws. Oh, sure, I married from a particular family. Now you start calling my father-in-law. You threaten my marriage. It is dangerous. But because of that coercing, the person says, let me go pay this man. But he has not paid in a good way. He goes gassing. So anything that compromises that presses the lending industry says, let them go and pay. Those guys they are doing a bad side. But not knowing where it started from, how you treated them.
Do we have a credit reference bureau where banks report and all this? Do money lenders report to that, or is it something that you can tap into so that your client comes, you can assess them as using that system as part of your analysis to see if they are lendable?
As lenders, we don't commit data to the CRB, but we run CRB reports. So CRB reports see how many loans does this person have. They have a loan anyway. Can I get in the same mix if he has a loan already? Does he have good cash flows to pay all the loans that he has? But as us, most of the lenders, actually all the lenders do not contribute data. But it's one of the things that we have in our roadmap as an association to make sure that we also contribute data, because we have systems which can auto-generate data and auto-push it to the CRB, credit reference bureaus, so they can actually know, someone borrowed. Because if you read someone's financial report from CRB and they borrowed from the lender, you can't know, because the data is not contributed. And that has been a tricky thing on the side of the lenders. Because they lend to so and so, knowing that they don't have a loan, but before you know it, someone has 3 loans. You've seen it. Person has 3 loans from different lenders. We have got scenarios of if someone borrows against the car, you put a caveat. But also there are some other informal lenders who don't do the process. For them, they want to look at the car. He says, I'm parking my car, give me money. The person just parked the car. And before you know it, someone borrowed from us. He put a carriage, he put a truck, he goes and borrows from Harvard, he parks the car. A person defaults, and we locate by GPS in the truck, we come and we go to Harvard. He says, I lent against this car. Like how? We already have the carriage on the car book. So how did you lend? We even have the car on the car. Say, the guy came and parked the car. But because you don't have CRB, he won't know that you lent. But probably because the person is informed. That's why we're encouraging informal lenders to transition to formal lenders. Because then you get to clean up industry, and you get helped in the long run as a lender. Or else you keep biting your hands and before you know it, you're close to. So we want to start contributing. Good things that companies have reached out. The one that the CRD credit reference bureaus. So we're in touch with them to see how we can integrate them, our APIs with their system. So that as and when someone applies for a loan, the information will be marked is auto generated and sent. Because sometimes you have big clientele, data can be cumbersome too. You need a particular.
I think it will also help with the UMRA, because instead of me going to UMRA to pay, get a receipt and all that, or when I do that, in addition, it is another data point to show that you cannot just come and grab my collateral, because not only did I pay, it's also registered as a CRB, I also have a receipt, so clearly you cannot come to take my car.
You can't come. You can't at all. But also for movable collateral, there's what we call SIMPRS under Uganda Registry Services Bureau, URSB. Where now you don't have to move to Ministry of Works or URA to register capital, it's only SIMPRS. And even if you have cows, even if you have a goat, it's a movable collateral. You can actually register it online.
A goat?
Yes.
A cow?
A cow. It's a movable collateral. A vehicle. It's a movable collateral. So there's a system called SIMPRS, which registers such interests on such. That even if I have a car that is worth 150 million and Jonaki has lent me 20 million, someone can lend you on the same if you still have some gap. Which options are not there? So as we're moving, things are changing, technology is advancing, and the clients are getting to a more favorable situation, as well as the lenders.
And the first lender will be the first recipient of the repayments.
Absolutely. In that order. And even if it comes to a time when you have to close on that item, it has priority, because it's a late person. The thing is, you'll have interest in that collateral. So it's a very permanent thing, and I think we're headed for a good jump start, and the roadmap is very, very good and clear. It looks clear. So CRB, very pertinent, because you need to who was broad, was not broad, handling loan, can they afford, can they meet? Because then it helps you as well as the client, not to get so much in detail. Sometimes you're doing the service to the client by saying you're not giving him money. Some of them are consumptive debts. He's going to borrow and drink. It's probably high in the bus somewhere, and you're like, you know what? Some 1 million there, some 2 million there. That's how some of these online loans are being accessed. Someone is stuck, probably as a group of people is buying now. You need to talk up with star 1, 2, 3, he's the money. Quick relief. And is it for the money, you don't use it for what it is that you wanted it for? Or something, you can't point at something that you use it for. Yes. It becomes very hard to pay.
Yes.
See, why am I paying these guys? I can use this money to buy things for my friends. You don't have any encouragement. Yes. Yeah. But if you use that money to buy land, you can look at the land and say, by the way, this thing helps. So it helps. It really helps. That's why consumptive debt is bad. But a productive one, it can actually give you the energy and the zeal and the will to actually pay. So let me take you back to what we discussed on the issue of transparency and reputation. See, the lending industry is an industry that is defined by trust. So that's why someone can go to a company to borrow from a company that is lending at 15% and leave a company that is lending at 10%. Because they trust the company 15%. So some of the borrowers are good clients. The intention is that they want to pay. But they're looking for who to borrow from who is genuine and who will not take advantage of their collateral. The thing is, you have the money as a lender. The client has the collateral and the cash flows and the need for the money. You all need to be in business. So that's what I told you prior, that you're pushing for a catalog where just like at Alibaba, just like any other platform where people buy things from, I can log in and compare different lenders. I know that Jonaki is lending at 5%. So and so is lending at 10%. At these terms, each of them at their terms. Then I can click on one of the lenders whom I'm comfortable with, whom I can meet their requirements, and I know they're not after my collateral, but after my pay, so they can get back my collateral. In this catalog, you actually have a point of review, where a borrower can get review the lender. Give a comment. So if I borrow from you, I am looking at your rating. I'm looking at your reviews. I'm looking at the experiences that people had with your service. Then even if you're lending at 10% and there's a guy who's lending at 5% purportedly, because there are people who say I'm lending at 5%, but in the nutshell, in the detail, they're actually lending at 15% because of those hidden silent costs. But now because of the reviews, someone will know that, you know what, this guy's 8% or 10% is absolute as is. And it's also reducing balance as he says. Not this person who is lending at 5 and probably saying it is reducing balance or has no hidden cost and yet it has. So from the reviews, then the borrower has the options of choosing the client that they want, choosing the lender that they want. And also they have the comfort. Because as I told you, the statement I opened with is that lending is an industry of trust. If I've not trusted you, I'll go to an expensive lender because I trust that expensive lender. But in the event that I can trust you at a lower rate, it will be a bigger advantage for me as a borrower. And then before you know it, even the capping of interest rates that the government is struggling with will be auto-settled. Because if I'm lending at 15% and I'm not getting business, and I see others in the catalog are lower, it will come down. It is a given. Forces of demand. You run short of clients and you tone down. But one thing you should know is that there is a cost you cannot lower below.
The fixed cost.
The fixed cost. Because all you do is that you add up all these fixed costs and then top up a small margin and then you lend. Because you need to know that some of the lenders also borrow. You're borrowing somewhere probably at 2% per month, 1.5%, 1%. And then you add operational costs. You add those constant costs. And then you add rent and all the other things. And then you add a small margin. And that's what defines the interest rate you lend at. So by how much you access the capital, and then that defines how much you lend at.
So you start with the prime lending rate.
Prime, yes.
Bank of Uganda. And then
you add inflation, you add the costs, you add what, and then you define, plus your small margin, because you're in business to make money as well. And then you make your interest rate. So it doesn't come from out of some much of the time. It is informed by something. That if someone has borrowed probably expensively, then it means that this person is going to lend expensively. Then there are people that we compete with in this industry that borrow cheaply from their countries. In some of these cases, borrowed to as low as 5% per annum. 6% per annum. That's 0.0 something per month. So again, that person can even afford to lend at 2% per month, and they are happy. The cost of capital is very bad because it depends how much, at what rate you lend out the money. If your cost of capital is expensive, then you definitely lend out slightly higher. If it's low, then you lend out slightly low. And that is one of the drives that we have as Money Lender Association of Uganda. We want to make like a circle of sorts where you can have cheap money. Cheap money of probably as low as 1% per month, or 0.5% per month. And because you have proved the systems of other lenders, they can come and borrow from that circle or from us at that 1% or 0.5% per month. then they will have no excuse that even if you added inflation and added all the other things, it cannot explain the 15% you lend at. But also it will help them to grow. Because why the loans are expensive is because the access to capital is expensive. If I borrowed my capital at 2% or 3% per month, you don't expect me to lend at 3%. I'll lose the money. And probably I'll have secured it and I'll lose my property. So it's one of the things we are trying to tap as the lender association. How can we avail money? But we also want to interest government as well. Their money is pumped to manufacturers, money is pumped to other industries. Why not the lenders? But even banks, do you know the banks have access to money? For every money that you save, you can lend to as much as 10 times. They even borrow sometimes from the Bank of Uganda. They even syndicate. They think this is public knowledge. So the lenders should also have they should have similar platform, similar opportunity, that they can actually borrow cheap money. And it's one of the drives that we have. Then you can know, it's not Jonathan, you cannot lend at 10%. Since you are giving him money to 0.5% per month, now the maximum you can lend at is 5%, reducing balance. So you will be happy, the lender will be happy, and even the clients will be happy. And that will help the industry. Because you know what, it's not that the lenders want back and forth as well. No one wants back and forth. I must tell you about scenarios where it has hit me on the head. Serious downfalls. I'll give one example of a client. I think my lowest moment, one of the clients. So this person comes to us. He borrowed from us about a chunk of money. He had a property in home. These guys even connect. They either connect with the owners. I don't know how they do it, but they are fraudsters. So he brings the property, we value it. It had very good value versus the amount he wanted. He even stepped up the for sale value because the window was big. He borrowed a chunk of money. Because of the pressure, because see, these fraudsters, they put in a lot of pressure. These are the guys that come on Friday evening or Friday afternoon. He knows you're heading towards the weekend. He wanted to use that window. So he started the process gradually from Monday, then intensified on Friday, telling you how he's going to load tea factory, workers already inside. So we made a mistake of wiring money before putting the mortgage with the land title. So the mortgage didn't go on that Friday, it went on Monday. But we had already released the money, since most of the things were ticket. So when you put a mortgage on Monday, the mortgage bounced. They said, the landlord was saying, you know what, the picture of the person on the title is not the picture in the national ID. Guy had faked the land title, faked the national ID, faked the signature, everything. With even guarantors, even the guarantors were false. The mortgage bounces. Before you hear it, the owner was also raising the inquiry, sends their lawyer. So you wonder how did the owner come to know as well? He must have been lying the problem. So when we take the title to the registrar, it says, you know, Jonan, I cannot tell which title is original, which one is fake. Because all the titles looked original. Even sometimes the fake are not more original than the original. And when we went to first part, the guy had over 8 counts at CPS fraud. We arrested him like 5 times until he said, what? It's a bad one. He wrote it. Chunk of money. So you can imagine if you have a number of fraudsters and you've not closed some of the gaps, you can easily close shop. And I'm telling you, people are closing shop. People are properly closing shop. Because they will not do the due diligence. But also the borrowers, some of the borrowers are fraudsters. They will take advantage of whatever situation.
Are you insured? How do you survive something like this?
By then we are not insured, but now we insure. Now we insure. Because it is very, you can get out of shop properly. You get a few hits here and there. You're crippled. So insurance comes in handy. Even for the vehicles, we insure. Comprehensive insurance. The car gets an accident, it gets stolen. We've lent one of the people, and the person went to South Sudan, has never come back. It ensures that come in hand. But also because of now our GPS that will geofence. So the GPS will tell you, this guy is heading to Malabo. So it will tell you someone is driving at a very interesting speed towards the border. Then you have to touch base and say, I am not aware this person is living out of the country. So the English is very interesting. You have to understand some of these things. And that's why people who have not budget to look out for knowledge or information or learn from other people who have gone through such. School fees in learning industry is very expensive. It can cost you as much as your whole capital by serving wrong clients.
The cost of the education planning.
So you'd rather learn from one habit towards doing it for a while. Because then you learn a few things. But sometimes when you don't learn the hard way, it becomes hard to learn. I'll show one example. One of my mentors, I was going to serve a client. A certain hand, he had applied for 175 million. So I called this guy, my mentor, said, I want to transact on this loan. The person wants this much. She's like, Jonan, don't transact. And why? I have said it. First, is that guy is going to tell you he's not wrong. It's like the guy had assisted the client on my behalf. Same things he told me. He's going to tell you, I separated with my wife, or I'm not married. And before you know it, because things have gone south, he has refused to pay. When you touch his property, says, my wife cannot allow. He didn't sign. She didn't sign. That's what exactly happened. So this guy tells me to transact, but you went ahead and transact.
You felt you knew more.
I felt as a big boy, I'm like, man, this guy knows that I hate business. I also need to get up lunch. So I went against his guidance. And it was a back and forth.
Exactly.
What exactly? The person who came to us who didn't have a wife, now he says, you know what, by the way, my wife didn't say. I'm like, wow. So,
marital property in law.
Can you touch it? Can you touch it? So you have to sit down and you see how to work it out. And sometimes you are tismas. So you never reach a curve. I have allowed. You never reach a moment where you think you've overlearned. Learning is for every day. Especially now in industry. New tricks come, new things come up. So you need to learn consistently. Even if it means paying a small cost, you have to pay it. Why? Because then you get to value that information, but also true, it will get to save you a bigger cost. You don't know what extent that cost will be, because it can cost your whole business. I've seen guys that lend more than 60% of their portfolio, one client. Yeah. The person has a capital of 300 million or 500 million. One Jonan comes, gives 300. In the event that Jonan does not show up or travels out of the country, your heart can even jump out of the roof. Because the whole business is moving with one person. Too much risk. So the one is you cannot lend more than 5% of your own client. So you can distribute
That is a good practice.
Very good practice. Then you have to reach. I used not to have caps. You have a small portfolio, but you want to lend as much as 300 million, 200 million. But you don't put in there. But now if you say my maximum is 5% of my loan portfolio, given your loan portfolio, you can say my maximum amount is 20 million. So if a client comes and wants 150 million, you say that I'm not able to serve you. So until you can let go of some of the businesses or some of the deals, because your cap has been arrived at, then you have not matured in business. You have to reach a moment that the deal looks very good. You reach a moment and you know what, my cap is 50 million. That takes maturity. Yes. Especially if you have money on the account.
Yes.
So when you have money on the account,
and the deal looks
very juicy. Boss, you can win. And even not even diverting the money, because someone will come to the property and says, Jonan, there's a TV here. It's a property. And you see money on the account. Like, if first they take a portion of it, first buy this property, we shall sell. You're in the business of building new real estate. So all those things are trained by what we call systems. I have reached the moment of bring a client, and my loans committee sits and says, you know what, this person this can ABCD cannot give them money. But you know this person is your colleague, probably is your friend, and your own staff tells you, you know what, loans committee has decided we cannot give because of ABCD, and you're okay with it. But previously, man, serve that person. Not knowing that you put these people to shield you. Because you yourself, you're a risk to your business. You're a big risk. That's why I don't work with clients. My role is to transition the client to the operations manager, to manage, to handle. Because I have emotional attachment to this person. I know you at a personal level. And some guys will treat me like, but Jonan, you know my home, they want me to sign here again. Even my wife. But now if the staff is under instruction and procedurally, they are going to sign, they say, yeah, my job. You actually have to sign or else you are not present. So you're even better off. You shield it. So systems and procedures tend to shield us from our businesses. Because you can fail away to the business and you collapse it. It's true. And you collapse it. Big reason.
A person who wants to start the money lending business, from what I understand, there's an element of saturation of these people. I mean, even if you're at a traffic light, they come with flyers trying to, save you money. What would you advise? Is it something that they can start? What would be like a good minimum amount to start with? I know any amount can start money lending, but for a good, maybe profitable business, right? What amount might they look at, and if this is a good time?
Yeah, I must say that business is there for lending, and anyone can start. Actually, lending is one of the best businesses I've seen. I don't know if it's because I'm operating one, but it's one of the best businesses. It has good return on investment. It does, big time. Yeah, and especially if you're serving good clients, you see your cash. So it's a good business. It does not have too much nitty-gritty in all that. So it's a good business to start. So for anyone who wants to start, they're at liberty to start. The minimum amount they can start with, I'm thinking minimum 100 million. Yes, you can start with 30, 20, 50, what? But I'm saying the minimum to one, give you headway, good kickstart, but also make sure that you're formalized 100 million. And because with 100 million, then you can afford to pay one or two staff. You can afford to rent in a decent building. You can afford to apply for a license. And you can afford to make some profit. But one thing I would emphasize that with that amount, starting with that amount, is that it is important that you expose yourself to someone who is ahead of you.
Yes,
A mentor of sorts, or coach, or whatever. Someone who is actually not just telling you books, he has read or what, but the actuality of the thing that they're doing.
like the friend you mentioned.
Like the friend you mentioned. Because then someone will show you, and you can go through the thing. So it's not that I'm telling you rocket science. Because then they'll get to hold your hand, and before you know it, 100 million can translate to $1 million. And then $1 million. That's how things work. You even better off starting with small money, even if you have a lot of money. Because then there are some mistakes that you get to appreciate along the way. And you make a good head start, and along the way, you pick momentum, and then you can get to scale up. So that's why it's also good. You could have the money, bigger monies, but that's why even starting with 100 million is better. Then you get to run things. And I love organic growth. It's good to grow organically. The Bible says in Proverbs 13:11, it's honest money brings the way. But whoever gathers money little by little makes it grow. So things that stand the test of time are things that grow gradually, little by little, little by little. But for as far as we live, there will always be a borrower, there will be a lender. So either way you can choose where to belong, but there's still gap inside the lender. Really to the borrowers.
Proverbs.
Yeah.
When you look at your entire career from start till today, what would you say has been your greatest achievement, personally or business-wise, or both, in this one?
Yes, what a good question. So my greatest achievement is that I've always wanted to help, but also I've always been exposed to opportunities to help. Majorly support with school fees. So I used to depend on my salary to support some of the people. Some of them were managers. Some of them were people at the farm. The guy provides you a small boy. He says, you know what, I have my mom. I'm the only son. He doesn't have a house. I want an advance of 1.5 million. You're advanced. You're banking on the good faith that this person is going to go build a small house for your mom, but also keep on the job. You just bet it. So I reached a moment when my expenditure was high, I decided to give. But I had other conflicting priorities. So I reached a moment, I said, you know what, I think I have to check up. But I got exposed to a bracket of business leaders. Some pronounced business leaders. And I learned from them. I also realized that a business is a living entity. A business is a living entity. Just like I'm an individual, a business is an individual. So I'm a Christian. I'm born again Christian. So just like I tithe, the business is meant to tithe. So out of Jonaki Holdings, we birthed what we call Jonaki Foundation. Fully registered, fully fledged foundation. Now, it offloaded my load from me as an individual because I have a wife and 2 children. The load went to the Jonaki Foundation. They were supposed to have about 15 children. Some of them at the university, some of them in secondary school, some in primary. You don't know what joy it gives you. On a monthly, I may not highlight the figure, but it's not a small figure. You to pay school fees on a term. Not a small figure. And even on a semester. It's not a small figure. And most of these people, we are not related. But a conviction, and just. So this foundation has really, really helped me. And whenever I see myself paying for someone, children going to school, supporting them, then I say, Jonan is worth living. Why? Because it is impacting something. So my joy, yes, money is good. Get profit and buy good things and all that. But I think what has filled my tank the most is seeing the hand that Jonaki Holdings through Jonaki Foundation does for people and does for those students at this post. I look at a time when we should have a lineup, and I see it coming forth very fast. Because I have my friends, rich friends. And since I was based in Uganda, I thought driving a 70th anniversary Land Cruiser, 700 million would cut it, but I feel no. I thought living in Colorado or whatever would cut it, but I still feel. I never done all of this much a month, but I still feel it's not it. I've run business, but it's still not it. Then you realize that someone has some gap inside you. There's some vacuum. That it's until you've impacted a particular human being that you can come to value efforts, that life becomes meaningful. So my life and my colleagues' lives, my staff's lives, has become meaningful because of what it is that we contribute to. I couldn't pay my staff enough to work overtime. I couldn't pay them enough to commit beyond. There are some of my staff who have been compromised. The client says, you know what, approve my loan, I'm giving you half. About if you're approving 150 million and someone's giving you 750 million. Because he wants to pass a deal and probably default. And the client says, and the person, staff says, tell you the sidelines, tells the committee, they are cancelling this loan. So you cannot pay that person that much to deny someone opportunities. You see banks, people do, connive, do. So there are things that go beyond money. When he knows that your contribution was a big thing, then they will have that belonging beyond salary, beyond employment. They have a longer picture. Because as I tell my staff, I cannot work with you 1, 2, 3 years, and you still at the same financial level. How? Impossible. Impossible. Because I have big interest in you. I know what you do. I know. You are parent. I know how many dependents you have. So it's something beyond money. So that gives me courage to wake up every morning and make the job I have to do. And because there's a bigger cause. There's a bigger cause. And that's why you're not in countries. Because for as soon as I get a voice in my heart and I'm clear about it and the numbers are not good, I'll not. Because I know the 15 I'm corporate to nations. I'm corporate to nations, not just one nation, but to nations. And I borrow from now. And you see, business has catapulted. You can't, there's some things you cannot explain. You can't explain when a client comes and all the things are tick. The numbers are okay, everything's okay. But somehow your conscience is not clean. But when you Google someone's name, you see so and so versus Bank of versus Korean Bank versus Centenary Bank. The guy has like four lawsuits. This is good. You think I can get this week. But all the other things were tick. But because something in your conscience, now you cannot explain that. If it's not the Holy Spirit, then what? Some things you cannot explain. So I must say that that's one of my best moments. To see my business transform lives, to see my business impact even my fellow staff and myself. I know I can walk my head high because you know I'm doing something that is building them. I can only get one. I can't see someone else. So eventually, that's what makes me into. At the end of the day, it's what makes life worth living.